All right, here we are again with another update on the gold forecaster index, the holy grail to predict gold prices. In my last video, I said that gold would explode in September, and that's exactly what happened. So here we said that it would explode and it went up. So where do we stand now? So you need to be on top of things these days because if you're too late, then you will miss out on these things. So now we need to worry about a correction because things cannot go up continuously. So when will it correct? I don't know, but the gold forecast index knows. So let's go to the new data point. And what does our data point say? Let's go to the one with the producer price index. And it says in July, we have a very bullish signal going even higher than the last data here. So that means you need to buy gold. Okay. And also in this chart, which uses the CPI, it also points to a buy signal. So I expect that gold will be going even higher, maybe to the 1600 level. But we will see if this continues, this red line. Let's go over some data here. Just wanted to show you that this is the ratio between the total market cap of stocks versus GDP. We are still at an all-time high here at 140. So we are really significantly overvalued. So I think it's not very good to be in stocks at this moment. Okay. So another reason to be in gold. Let's look at the leading indicators to see if the economy is doing well or not. This trend is going down. So the blue line leading index is going down. So I expect that, yeah, the economy will be sluggish. It didn't fall as fast as in 2008, but it is not going up. So it is slowly going to the zero line and maybe even accelerating here. If you can look at it. Yeah, it seems to be accelerating. This latest data point isn't going up a lot, so so the next month could be even lower. Okay, let's look at the capacity utilization, which is a leading indicator for inflation. It's still going down, even though Trump says that he will bring jobs back to America. Since July, it has done the opposite. So this will not be good for inflation. Okay, let's look at this one. These are the 10-year yield, the blue line, inflation adjusted. And you can see that it's going down since 2019, and that's why gold went up. But if you look carefully, this blue line is not as bad as in 2008 and 2011. So actually, this blue line can go even lower. We could have more negative interest rates. And if that happens, yeah, then gold will go even higher. So if you look at the red line, we have already 20% gains year over year. So it's a nice profit. And the following chart is the producer price index, which we need to monitor carefully because it leads the CPI. And we saw that it went down, but the latest data, we see a rise again here. So maybe it can go above zero in the next month. But at the moment, we should see the CPI going a bit lower, maybe to the 1.6% level, and then we will see after that. So there's not a lot of inflation, and that's why the Federal Reserve needs to cut interest rates. And that's exactly what they will do. But I want to show you also this. This is the balance sheet. The red line is the balance sheet of the Federal Reserve, and they said that they would stop QT in August. So what happened? It still went down. Okay, it still went down here to 3759 from 378. So they are actually not doing what they say. And even with this QT still ongoing, the gold price is doing very well. So what would happen if they actually increase the balance sheet again in the next months? Then gold would really explode and then the dollar would go down. Okay, the latest number on the trade deficit can be seen here. So if you look at the long-term chart, you can see that this red line is actually going down at a faster pace. So here it was flat, and now it starts to decline more. And the latest data point here was actually a miss. They had expected that the trade deficit wasn't that large, so it's actually a miss here in July. Okay, it went back up a bit, but I expect that this will go lower, which is not good for the dollar, but good for gold. Next chart. I want to show you that since 2015 we got a spread here between the purple line and the green line. Green is the 10-year yield and red line is the AAA rated yield. And we see that this spread has actually widened. So the 10-year yield went much lower than the AAA yield. So this could mean that something bad is happening. And if you look at the spread, it is going down. And this is correlated with GDP, real GDP. It is going down and it starts to accelerate. So I expect that the real GDP will be weak. Let's look at the following. Yeah, this is evidence that the Federal Reserve will cut interest rates because they will always follow the two-year yield, two-year bond yield. And this is crashing down here to 150. And the Fed funds rate is at above 2%. So we will see half a point rate cut or 25 maybe. So we will see about that, but we will have a rate cut soon. Let's take a look at the yield curve. Yeah, you see that the yield curve is inverting. It's still inverting, and this is pure evidence here that it's getting worse. The leading indicator, which is the blue line here, is actually accelerating down. Let's look at it close up. So I thought this was going to go back up as the Federal Reserve was cutting rates, but yeah, they didn't do it. They didn't cut it low enough. So what happened is that we are starting to decline again, and this is accelerating here. So I think that the yield curve will invert even more at this moment if the Federal Reserve isn't doing what it should do, cutting rates. Okay, let's go over some of the blog posts. This is the dollar versus the trade balance. So trade balance is correlated to the dollar. And when this trade deficit goes up, the dollar should go down. And this is also happening now. Um, Trade deficit is going up, accelerating up. Yeah, this is negative here. And yeah, the dollar has been pretty strong lately, but I expect that this will start declining, this dollar. Maybe in, yeah, you can see here that it's sometimes it goes up, but then it crashes down with it. So we could see it in a year or two that the dollar will start falling. Hong Kong, also very interesting to watch. You can see that yeah, the PMI is now at 40, below 40, and that means that GDP growth is minus 4%. But yeah, the latest news is that Carrie Lam has started to cave now. So she's going to nullify the extradition bill. So probably there's some hope here, and we will see the recession, but it could improve. Okay, yeah, this is just a play here that you can do. I think nickel is very interesting to get into. As you can see, the nickel price has started to move up. A lot of mining companies are now drilling for nickel. They know that it will go up. So Norilsk nickel is one of the best to buy in this. They have nickel and palladium. All both are 30% of the revenue. Palladium is doing well. I will show you that chart. It's doing well because diesel cars are going to petrol cars uh, because it's much cheaper to use petrol than diesel. So that's why they go to the petrol. And that's also why palladium is moving up. So if palladium goes up, Norilsk nickel will be doing well. And also nickel, which is also 30% of the revenue, will be beneficial to the company. Now this company has a 10% dividend and PE of 9, so I expect this to grow at 10% per year at least. That's high debt, but can be paid off. Here's some more evidence that the economy is not doing well. PMI is in contraction. I talked about it. This was the inversion of the yield curve, which is getting worse. I have some more data here on the Shanghai Futures Exchange silver inventory. Still going up, but at a slower pace. So we could see that silver flattening out in the next months, maybe. So I would take a little bit of the silver profits and maybe put it in nickel or in platinum. And also the premiums on the PSLV have been coming down again, so I would be wary about buying silver at this moment. But it will go up in the future, but in the short term, you should be wary about it. Okay, so yeah, this is about the balance sheet. You can see that it's not flattening out. They are still doing QT. I talked about that. Some video about Peter Schiff saying that renting a house is better than buying a house. You can listen to that. Here a nice chart about so Trump got elected here in 2017, and we can see that gold has actually outperformed the S&P 500. Very interesting. Now platinum is also a nice play, I think. You can see that gold is much higher than platinum at this moment, so it's a good play to get into that. And I think palladium, they are using palladium and they need to switch back to platinum because it's much too expensive at this time. So I will see some strength in platinum in the future. Here again, the gold forecaster index showing that it predicts perfectly the gold price here. Very nice chart. This is about copper here. Copper is not doing well. And when copper goes down, yeah, then silver goes up because it's a byproduct. And you can also see that copper is correlated to the bond yields. A nice chart from Mark Demezel on production versus price. So you can see here the gold price in blue and production in red. So when production goes down, price goes up. And yeah, maybe this here, maybe production will be going down here and price will go up. So we will see about that. Okay, so China is still imposing tariffs. Trade war is still ongoing. Will be good for gold. The same chart here. PMI is contracting. This chart is about the non-farm payroll numbers in blue, and it is the leading indicator for the unemployment. See that it is going down now, the blue line. So I expect that unemployment rate will start to go up. So this was the Sprott Silver Trust that I was talking about. So the premium has been going up, which was positive for the silver price, but lately, this month, it has started to go down again. So that's a warning sign to get out of silver. Yeah, here you can see that China is not doing well. Growth is stalling. In this chart, you can see the registered gold, and I like to watch this chart because when this registered gold chart is very low, then typically we see a bottom in the gold price, and now it's trying to move up again. So I also said that you should go out of altcoins and get into Bitcoin because Bitcoin was considered a currency and now it also has an ETF apparently. So let's look at the latest chart. Yeah, you can see that it's Bitcoin is now 70% dominance and altcoins are going down. So that was a nice prediction. Here you can see that the treasury doesn't have a lot of money anymore. So it's now at, I think, 150 billion. So they need to take in debt. This is an interesting chart. So we are now in a transition phase, somewhere here. And I compared it with the bacterial growth curve. So we are transitioning and probably going to die in a few years, maybe due to 5G or anything like that. But it's very interesting to see these correlations. Yeah, I talked about this as well. The real interest rates are now not very low. We have seen lower in 2008 and 2011. So rate cuts can go on because we are not nearly at the lows here. Yeah, I'm a very big fan of Lynette Zhang, so she answered a question of mine. Here is a mail from Zero Hedge about, yeah, doing QE apparently. Yeah, so you know that the Federal Reserve will be doing QE. Yeah, negative rates environment means that the PE ratios should be low, and we're still at 16 now, so I expect that the prices will go down of the stocks. A post about the reset of gold to 10,000. You can watch that. And Hong Kong is going to a recession. GDP growth is going down. Man, a lot of posts. Okay, so this was the last post from the previous video. So we're done here. Gold forecast index is positive, so you can go on and buy some more precious metals. I'll see you in the next video.